Welcome to Estate Planning Weekly. I'm Bill Gross at Bill Gross Probate and social media. We get together every week and talk about issues of estate planning oriented towards professionals, real estate agents, attorneys, vendors, insurance, as well as families who are going through the process. And really lucky today to have a leading insurance agent, Weaver Insurance's Dana Dattola, talk about the role that insurance, but I think more importantly from where I sit, the insurance advisor plays in proper estate planning. Dana, thank you so much for making time for us.
Thanks for having me. I appreciate you having me.
How did you end up in insurance as a business? What was it that brought you into that field?
I was born into it. My grandfather started our agency in 1959. So I've been,
wow.
My diapers were changed on the conference room table in here. So I've been in the agency full time for about 20 years. I purchased the business from my parents January of 2024. So been running it about 8 years, but officially 100% owner for the last year and a month.
How exciting.
Yeah.
Entrepreneurship. So we'll get back to that, but let's talk about in general the insurance concept. Your insurance brokerage, we spoke a little bit before, is primarily insurance for the business, about 2/3, about 1/3 more personal. Talk a little bit about the strategy. Why is that your focus versus other insurance agencies or maybe more personal line or homeowner insurance or car insurance? Why is it that your focus?
Yeah, property and casualty insurance is our focus. In terms of number of clients, we have more individual clients than we do businesses, but premiums are just higher. So our revenue wise, it's about double the commercial, premiums that we handle. But in terms of like number of actual people, I think it'd probably be 3 times as many individuals, just because of, insurance for a business is significantly more expensive than insurance for an individual. So a lot of times, my grandfather who started the agency was door to door selling home and auto insurance is kind of how it started. And then those people that he sold to would be business owners, and then we would start doing the business owner side of it. And so most of our business owner clients are also individual policyholders. So,
same with real estate agents. I think so many agents pigeonhole themselves as residential. I followed my customer base, and as more and more owned businesses and needed help, it was natural. They trusted me. They liked me. And a couple in the beginning said, "Hey, I know you don't specialize in this product, but I want you to handle the transaction for me. And so bring a partner or do what you need to do, but bring me along." And the next thing you know, like today, 2/3 of my business is non-residential. And that's just because my clients, have grown into that business. So let's talk about that. From where I sit as a real estate agent, and I specialize in probate and trust administration real estate. So that means somebody most commonly is gone and somebody else is coming over. There's a transition. And, unfortunately, I create more value where there's problems than when everything's done properly. In a proper transition plan, everything's thought of ahead of time. And by definition, if you don't think of ahead of time, there's problems, and that's where people come in. Talk about your role. When you have somebody who's an important client who has a business and has their personal lines, maybe they have their kids involved with you. At what stage do you go from just really fulfilling a request, hey, I got a new car, I got a new house, I need insurance, to really stopping and saying, hey, let's take a look at everything and make sure we have a strategy here or we're part of the plan so that something doesn't get left out along the way?
Yeah, absolutely. We work with a lot of financial advisors, and our thing is, if you work with a wealth manager and you've got this beautiful plan in place and you've built all these assets, improperly insuring it, you could lose everything. So
yes.
we're seeing this right now. The fires just happened a few weeks ago, and people who maybe didn't have appropriate insurance are going to be devastated. And it was something that they probably should have reviewed with their broker ahead of time. So we reach out annually to our policyholders to do a full review. Our little tagline is life changes and so should your insurance. And so we're not always the first person you call when you maybe start a new trust or you make updates to your home or you start a new business or all these things. So we try to be proactive and let's review the coverages that we have. Let's, we have an email that goes out if you'd like to schedule, an appointment to review everything. We would like to do that. So yeah, I highly recommend everybody look at their insurance policies on an annual basis at least.
So one of the things my father taught me was nothing's ever a problem until it's a problem, right? Insurance is a classic case of, well, it doesn't matter what the insurance says until there's a problem, you want to collect on it. Then all of a sudden the microscope comes out, the wording is looked at, and that's where you have problems. And I think right now I've seen, for example, because I follow the LA Bar Association discussion groups on insurance, one of the things is their insurance claims are already coming back saying, oh, well, you bought the property as Mary and Joe, but the property is held in the title of the trust. You didn't get the trust as additional insured. And there's a whole debate as to whether that's legal, it's not legal, how prominent that claim will be. It seems to make a small thing to just add an additional insured, right? That's just typically, my experience is a phone call to somebody in your staff, and next thing you know, an email comes out with an additional insured. Why don't people just do that? What is holding them back? And you'll charge for that.
Think about it. Yeah, no, some carriers do charge. Like my homeowner's insurance company, we're brokers, so we represent a lot of different insurance companies, and we'll go and find whatever we think's best fit. But I'm with Mercury myself, so they charge $32 to add a trust on the policy. It's not a huge, but some of the carriers do charge, others don't. It's just people don't tell us. We don't. So if you don't think about it, the good estate attorney should always be coaching their clients like, hey, call your insurance agent, make sure this gets changed. It's a question that we ask when writing a policy, but if you line up a trust and never tell us about it, there's no way for us, we're not constantly checking the property titles to make sure that the policies match. So it's important for people to know. And that's like, forever when we do a lot of reviews for financial planners of like send their clients all of their policies and we'll do a review. And a really like low hanging fruit is, hey, your home's in a trust and it's not listed on your policy. It's something we've always told people, like, there's a chance you wouldn't have any coverage if this wasn't. It definitely could be a declined claim. In my opinion, I don't think that any of the carriers are going to stand behind that. If they've been insuring a structure, it's the same address, it's the same square footage, it's the same everything. I think just the court of public opinion alone would murder them if they didn't pick up these claims. So I think the news outlets are making it a bigger deal than it is. I have yet to see a declined claim due to the title being the trust and the trust not being listed on the policy.
Well, I'm sure there's not been any yet, but I don't mean, well, let me disagree with you as far as my prediction, which is there are going to be insurance companies who are going to go out of business.
Oh, for sure.
And before they go out of business, they'll say anything, and they'll throw out whatever they can, delaying tactic, as long as they can, because they're going to hope that some government agency will come and bail them out. And if they can last an extra 6 months by lying and cheating customers. So for now, they're all playing nice. They're all concerned about their reputation. I saw this in the mortgage industry when in 2008, people forget Bank of America is not Bank of America. Bank of America went bankrupt, and North Carolina National Bank bought them, kept the name. Wells Fargo was not Wells Fargo. They were bought by another bank. And so these companies on the way out the door really abuse their customers to try to stay in business. And I think I'm not a negative person, the opposite. I try to be proactive and positive and say, hey, let's get in front of this.
Yeah.
And if you find out your policy is not matched up, talk to attorney now. Don't wait until your claim is declined. And yes, I think Dan is probably right that the decline probably won't stick. But if you're stuck in that mode while they're going out of business, it doesn't matter if you're right or wrong, you're not going to get paid. That's really at the bottom line.
Absolutely. And I hope that the news, because there's a lot of this on the news, it prompts people to go take a look at their insurance policies and make sure, hey, my limits are adequate. Oh, gosh, I didn't add my trust. All those things. For the people that have already lost their homes, you're right. There will be some kind of fly-by-night carriers that are probably not in that can't afford this. But I think the companies of, the ones that you can say their name, I think I would feel pretty confident they're going to stand behind the claims.
So do you feel that the ones that you can sing their jingle or recite their television advertisement during a football game, do you feel those companies are going to make it through this and be able to honor their claims? Are you concerned? I mean, I'm very concerned. I'm not negative, maybe because I live the mortgage industry so fully that in my mind, there's going to be tremendous consolidation and there'll be a few strong players and the rest not. Is your feeling that most of these companies will make it through? It's just a small fly-by-night. You think they're going to be?
I feel pretty confident. I mean, I'm on, a lot of the carriers have agent advisory councils where they'll pick a handful of agents that sit with like the C-suite. And so I'm on that for a couple of the larger insurance companies, and they've budgeted they have the reinsurance. Are they going to tap in the reinsurance market? Yes. In the long term, is it going to increase rates? Absolutely. But are they going to go insolvent? As the California Insurance Guarantee going to have to bail them out? I don't think so. I think so far the numbers that I'm hearing is I don't foresee any of those companies that now I don't represent the State Farm, the Farmers, the Allstate. Those are direct writers. So the companies I'm talking about are your Travelers, your Chubb, your Safeco, your Liberty, your Mercury, Nationwide. Those companies are the ones that I'm speaking about.
Still, I would think to be similar. That's certainly encouraging. I saw some numbers this week also. CoStar estimated the total loss of property in Southern California at 30 billion, which is a lot less than some of the other numbers I'd heard. Not that 30 billion is insignificant, but that's not 150 or 300 billion. Some numbers I've seen thrown around by.
I think some of those numbers were like Zillow listing prices. And you have to remember that we don't insure the land. So if your beachfront PCH
Right.
gorgeous home, it's $4 million for the land alone. And so I think that is where you're getting inflated numbers, because we're not going to rebuild the dirt. And so insurance companies are not going to get hit for what the Zillow pricing is for a home in these areas. And all the areas that burned are really desirable places to live. So the land value was really high.
Well, the properties of PCH, I think the land was worth $5 million and the house was worth a negative $1 million. And so at net $4 million, but really what burned down really is of no value. And then you might say, well, yeah, but it's expensive to remove. It's been removed. And then you might say, well, there's all these chemicals and stuff. Oh, that just all washed off last week. So really in some regards, I think that challenge taking care of itself. How often have you seen people with those homes that are, from where I sit, not worthwhile being insured, other than liability? Have you seen people who had homes that weren't insured who have losses? Is that something that are those people, they couldn't afford insurance, they let it lapse? Or are those people who realize, hey, my house isn't worth insuring, the land's worth $2 million, and with a house on it, it's not worth any more. Why would I pay for a policy to rebuild it if it's not really economical? Have you had customers call you with the losses?
Yeah, we had a handful. We've had 25 total losses for homes in our agency, and I'll double that in terms of like smoke damage claims. But we did have a handful of homes that had chose to go liability only. Mostly they were older, not updated. So they were really tough to insure in the first place. And it was so expensive to get the property insurance. And you're right, the land value was worth more than the rebuild costs. It was they were kind of falling apart. So they chose to purchase liability only. So in these cases, they don't have any coverage.
So let's go back to more of the estate planning kind of role that you have. I think that oftentimes you'll see customers who have kind of a mishmash of different pieces. And to me, that's always a red flag as a real estate agent when they get them to me, because that means nobody's looking at the whole package. How often has that happened to you? And I know that it always sounds self-serving to say, well, I'd like to take a look at everything to see if we can cover it. But I know as a professional, that's what you want to do. As a related professional, I want to see you or somebody take a look at the whole thing. I don't know anything about insurance, really. How common is that? And what's your role in that? How does that play out?
Yeah, it's super common. And our stance as an agency is, if we don't write all of your policies, we don't want to write a piece of it, just because there's too much exposure for us. If I think that the other broker has the umbrella, or I think they got the auto, or they have the directors and officers. And so I don't think it's in anyone's best interest to have all their insurance spread all over the place. I'm typically working with business owners. I have a team of 30. And so we have like designated people that do the personal lines and designated by industry. And so our typical pitch is interview your broker, find somebody that you feel comfortable with, find somebody that, you like their services that they offer, you like their risk management, techniques, all those things, and then have one person shopping your insurance. Because what happens in our world is, when I'm as a broker going out to market, each insurance company will only give one quote to one agent. So if you go to 5 different agents, they're all going to block each other, and it's not in your best interest, because what I want to do is I have full market access. I have access to all your policies. I'm going to negotiate on your behalf. So I'm going to take the quote I got from company A, and I'm going to give it to company B, and I'm going to say, beat it by 20%. And I'm going to do the same thing to the next one. And so having one person who understands everything you have going on, can go to market fully, as long as you trust that person. If you don't trust them, then you need to find a new broker. But that's our kind of stance on handling insurance for individuals and for businesses.
Insurance is such a powerful tool for estate planning in that it helps create liquidity to avoid, if it's necessary to pay taxes, to avoid having to sell illiquid assets. You don't have to sell the business if you have insurance. You have to sell the real estate if you have insurance. It's also a way to transfer money effectively. It's also a way to do buyouts. How involved are you in that advisory role process? You have a wealth advisor who's probably advising on the overall package of the finances. Is that something that they provide their own insurance for those types of things, or are you brought in with your wealth advisor and part of the team? How does that happen?
We're typically just the property and casualty piece. So their wealth
Got it.
managers are normally doing the long-term care or the life insurance or, key man, things like that are being provided by the advisor. And then we're coming in to ensure the liability and property. So I'm not typically looking at life insurance policies as like an investment or anything like that. We're just looking at how can we protect the assets that you have and how can we make sure that you could not have a potential claim that would devastate you financially. But I'm not looking at insurance as an investment vehicle. That's not what we do at our agency.
But it's an important part of estate planning. I think that's the thing that is so overlooked because people hear of it and think, oh, that's very expensive. Well, it is on one hand. On the other hand, what a great way to transfer business. What a great, to pay for the buyout. What a great way to handle those assets. Yeah. And so I think insurance provides an important part of that. So as you see people, when you get a chance to review, they do an annual review with you, or maybe they come to you the first time and they say, gee, I've been mishmashing on my own here and time to get somebody to help me with this. What are the most common mistakes that you see in customers that you're able to step in and correct?
Yeah. Underinsured is a huge one.
So what does that look like when you say that? What does that mean?
It means that you bought an insurance for your house when you bought it in 1970, and you've had it with the same carrier for the last 40 years, and you've never reviewed the limits, and your replacement cost is at, $100 a foot, and it just burned down in the Eaton fire, and you need $1,000 a foot. That's what we're seeing. It's just a lot of significantly underinsured properties. Also, people not understanding how their policies read, like for instance, having certain high valued items scheduled. They think, oh, I've got, this number on my homeowner's policy is going to cover everything. Well, no, there's a cap for your jewelry or your fine arts or your cash or firearms or all those things that maybe need to be specially scheduled. Also, just making sure that you have adequate limits on all the underlying policies so that your umbrella is correctly written. Sometimes we'll see that some will have an umbrella, but they don't have the limits needed on the underlying, and so there's a gap in the case of like a large claim. Another thing that we see, the trust not on the policy is pretty common. We see that all the time.
Can we just stop? We say it 10 times real fast. If you have a trust, make sure it's additional insured. If it costs $32, it's just the phone call to your attorney is going to cost you more than that.
Yeah, absolutely. It is silly not to do that. So that's probably like one of the first. It's surprising how many people don't have a trust. So that's also a recommendation.
Well, that's a whole nother topic.
Yeah.
In fact, I launched this podcast. I'll tell you, I never share this with you. So I've had Probate Weekly for 5 years as a podcast, and it's the largest real estate probate related, which embraces estate planning, which is to avoid probate, right? And regularly I would have on attorneys about getting estate plans and why it's important. And as a real estate agent, we're at the tip of the spear. They're buying the house. We know how they're taking title. They bought the house from us. We know how they took title. We have public records. We have easy access to that. And we have customers who don't get the estate plan, don't put the property in the estate plan to buy it. Therefore, it's not insured in the title, and they just open up themselves to problems. I just can't believe. To me, I think what's the term? A 5-alarm fire. Like, why would you not in California have a house in an estate plan of some sort of trust? Most commonly.
Yeah. We actually just bought, we have some income properties and we just bought one, and I goofed when we were closing escrow and it was in my personal name. And then I had to pay to have my trust attorney and it was like $800 to transfer it from individual to a trust, like right after the transaction had occurred. So do it ahead of time because you don't have to pay the attorney if you just put it in the trust in the first place. So I erred on my own in not, putting the trust on title when we closed escrow. And so I had to fix it and it cost me some money.
That's or the cobbler's kids don't have shoes. That's
Exactly.
always the
Exactly.
case. I'm the same way. I was talking one time about my estate plan. I was pointing to it because I used to keep it in the file cabinet right there, and I realized we just had a new account. We put money into a investment account that wasn't in the trust. So I'm like, hold it. When I'm done with this podcast, I need to get that changed. It's I think so critical to get that. And the other, now you'll appreciate this as an insurance agent. So if you do it, and of course you can do it afterwards, which is like basically, sure, procrastinate. Why is that a problem that you procrastinate? But the other minor issue is if you do it with the transaction, and you're buying title insurance almost all the time when you buy property, it's insured title into the trust versus if you do it afterwards, unless you buy a special policy, it's not insured. Is it a big deal? It's not a big deal unless it becomes a big deal. Then it's a big deal. So I always encourage customers when you're in escrow, when you're selling your house, you're buying your house, take a look at that and get an estate plan. If you don't have a estate planner, call me. I'll be more glad to find a resource for you for that. So, well, great.
Yeah.
So then typically as a business person, what's your business development look like? I know you guys have a great reputation. You've been around since literally the year I was born. Your company was started. At this point, is it all referral and past client and growth through there? Or I can't believe as big a company as you are, you're not constantly doing something to generate business. What's your business development strategy, if any, at this point?
Yeah, on the business side, we do a lot of networking. So my sales team were involved in a lot of professional networking groups. So typically our referrals are coming from a CPA, a business broker, HR consultant, things like that. Definitely did my share of cold calling when I was young in my career, but that's not so much. But yeah, it is definitely mostly referral based. So we're very fortunate that, that snowball, we really pride ourselves on our customer service. And so we hope people tell their friends, and that's what's been happening so far.
So I got your name as members of the Fiduciary Roundtable of San Gabriel Valley. Is that obviously you're a member that creates some activity? How important are those fiduciary type networking events for you? Is that something that you or your sales team members go to regularly and participate in?
Yeah, we do. They're great, especially fiduciary, because we touch on a lot of the different industries that are in the room. So, we write home and auto all day long, and all those homes that are in probate that need to get insured, we can do that. We also specialize in like caregiving facilities. So we write a lot of the commercial insurance for your elder care, in-home care, hospice, residential care facilities. So in the fiduciary world, it seems like there's a lot of people that focus in that world as well, because they're aging out and they have to go into a care facility, and then they have to get state in order and all those things. So we it's a great place for us to network.
It seems like when I talk to insurance agents that work with commercial more completely, that they always seem to have one or two or three industries that they really know really well and deep and provide, because they've had some big customers and went that way, and they had to really service them, and as a result create a specialty. And I think it's really important that when you go to these networking events, there are people who specialize in certain things. If you specialize in everything, you're probably good at nothing. If you specialize in a couple, then you're able to really provide in those areas some unique services. So again, you mentioned not home health care facilities.
Yeah, it's kind of like all of it. We do a lot of any businesses that are focused on helping aging adults is where we do a lot of. So those are the residential care facilities, the hospice, the in-home care.
Sure, very specialized liability. I would have to think you have very common problems. Obviously, fragile people by definition, they're older and they're sick, so you must have some special needs for clients' protection, I would think, in those areas.
Yeah, it's mostly actually workers' comp is the biggest issue for those kind of businesses, because as an employer, you have no control over the environment which your employees are going into. They're typically in someone's home or in a facility that's not yours and you don't run. So workers' comp is really our specialty in that industry. We do a lot of the in-home care, a lot of construction, which is also heavy workers' comp. We have an in-home or an in-house claims liaison and safety team that handle the workers' comp. That's a big part of it. And then we do a lot of property insurance. So a lot of large schedules of income properties, habitational, office space, industrial buildings. Those are kind of our niches. Construction, elder care. That name always changes, like what you
Yes.
call it, you know. And,
If you use the wrong one, you're like dated, so you have to be careful what you
I
use.
don't know what to call it, but and then construction.
That's why I'm estate planning a probate, where I avoid the whole whatever all that is. I don't even want. I'm always hesitant to say it too, because I don't know what the right term is. And if you use the wrong one to the wrong person, you definitely either dated yourself or you disqualified yourself, and it doesn't necessarily mean that. Well, look, Dave, it's been a pleasure talking to you. And for those who want to meet with her and or somebody on her team, weaverinsurance.com is the website. And on the top there's a phone number you can call, as well as an email if you want to reach out. And there's a little button there to get a quote. Is that the best way to get in touch with you guys?
Yeah, that's great.
Fantastic. I really appreciate the chance to chat with you today. One of the leaders, particularly in the care, aging care, elder care, commercial businesses, as well as full service for businesses, as well as business owners. Dan, thank you so much for your time today. I really appreciate you.
Thanks for having me.
And for actually, this was Estate Planning Weekly. We do this every week. Feel free to check out our YouTube channel for past episodes, as well as a link for all the audio formats if you're interested. I'm at Bill Gross Probate. As always, make today your best day ever. Thanks.